Stock market likes Trump. The latest consumer price index, also known as CPI, report showed inflation holding steady in July with prices up 2.7% year over year and 0.2% month over month. As economists point out, something called the core CPI, a number which excludes food and energy, was up to 3.1% annually and a big 0.3% increase in July. So energy was cheaper, but housing costs continue high for Americans. However, investors seem to key on the headline number and not the underlying core CPI number. So both the NASDAQ and the S&P index set all-time records in those markets over the last week. The jobs market is really not looking good, folks. Over the last few months, just 73,000 jobs were added in July, with unemployment rate up from 4.1% to 4.2%. I want to quickly add that I've been involved with employment numbers for a number of decades. 5% was always considered full employment. So these low unemployment numbers at 4.1, 4.2, they're irrelevant if it's lower than 5, basically. We've just gotten spoiled with the numbers the way they are. However, there are job changes coming, many of them attributed to AI. So we need to watch out for what's happening there. What we've seen in the current jobs market was 139,000 jobs for May and 147,000 jobs for July. So the 79,000 number is pretty tough. This would be a strong hint at a possible slowing economy. So why is the stock market so hot? Well, best guess is that the combined numbers above may well predict the Fed will finally lower its key rate. Powell is likely finally under enough pressure to do this. I note that some columnists disguised as Dems may proclaim this means the rich are getting richer under Trump. Well, an often overlooked statistic is that the majority of Americans are in the stock market. This is because most Americans no longer have a traditional pension plan where the plan handles the investments. The average American has savings plans, either a 401k or a 403b. That means when the market does well, they all do well. So a good market is a positive for the majority of Americans. At the same time, there are more amateur investors in the market, and they tend to scare easier than experienced investors who know the market may trend higher over time, but jolts to the market do happen with some regularity. Hang in there and enjoy the long-term ride. Most Americans should relax and not be checking their savings accounts more than once a quarter. This is Dr. David D. Shine. Thanks for joining me for this special edition of Saving America. Remember, a new Saving America show is aired on the Brushwood Media Network every Saturday at 11 a.m. Eastern Time. Listen on any of the 16 network stations, Apple or Google mobile app, Apple CarPlay, TuneIn, Smart Speaker, and all smart TVs. Find more information at the brushwoodmedianetwork.com. Please be sure to join us each week. We welcome and love your feedback from our growing audience.